Hello everybody and welcome to our next session. We are now going to be looking at who is investing in greenhouse gas removal and why. My name's Pilita Clark. I'm a columnist and an associate editor at the Financial Times, where the idea of making money from carbon removal is actually a source of growing interest to our readers. I'm very pleased to be joined today by four people with very deep and intense knowledge of the topic. On the screen, I hope, is Vicky West, a forestry and climate expert at Scottish Forestry, where she manages the UK Woodland Carbon Code, the UK's voluntary standard for woodland creation projects. To my immediate right is Wale, who is a manager at Counteract, an investment firm launched last year that specialises in greenhouse gas removal projects, which it expects to be part of a $10 billion market by 2026. To Caitlin's right is Katharina Kort, who is Managing Director of the Global Sustainable Finance Group at Bank of America Merrill Lynch, where she heads the group's work in Europe, the Middle East and Africa. And also on the screen is Alberto Arribas, who is the European lead for sustainability science at Microsoft, as well as a visiting professor at the University of Reading's Atmospheric Science Department and a member of the European Environment Agency. So we've got just under 50 odd minutes to cover quite a lot of important ground. And considering all the expertise in the room, we do want to leave plenty of time for audience questions. As you know, if you're watching online, you can send in questions via Slido, just by typing in the code on the screen there, 099169. And if you go to that site right away, you can take part in a poll that we thought we'd run at the start of this session. If we could get the poll up on the screen now. Hopefully you will see the following question. When do you think that greenhouse gas removal at scale will become profitable? Will it be by 2025, 2030, 2040, 2050? Or actually, hopefully there's another option there to say never. But maybe we've had another think about that. But anyway, do have a vote on whether you think that greenhouse gas removal at scale is going to become profitable sometime between 2025 and 2050. We'll wait a minute to see what's likely to happen with those results. I'm quite keen to to see what people say. What does the panel think is going to be the answer? Caitlin, what do you think?
I think by 2030.
2030, interesting.
2030.
Consensus emerging. Vicky?
I'd say it is already for some types of project, whether it's at scale, might take a little longer.
Scale is the crucial word. And Alberto, I can't ask you because you can cheat now by seeing that actually overwhelmingly people think it's going to be by 2040. Does that accord with your thoughts?
I would like to see it kind of happening earlier, like the rest of the panel. I was going to say 2030, so I think we are on the optimistic side in the panel.
That's why we work in the space.
Yeah. All right, well, let's look a little more closely at why those results might be right or hopelessly wrong. Vicky, can I ask you first, perhaps, just to explain to us what the Woodland Carbon Code program is and how it helps to spur investment in forestry schemes?
Sure. So the Woodland Carbon Code is the voluntary carbon standard for woodland creation projects in the UK. It was launched in 2011 and there's over 1,500 projects registered with the code already from Cornwall to Sutherland. Over 360 of those are validated now to our standard, and between them they'll create 18,000 hectares of woodland, which is predicted to sequester 7 million tonnes of CO2 over the next century. Equally, the peat code is slightly more in development, but they now have 90 projects registered, which will restore 10,000 hectares of peatland across the country. In terms of who's buying from our projects at the moment, they are companies with UK-based emissions who are looking to compensate for those emissions in some way by buying these UK-based credits. So large companies in the UK are currently mandated to report their emissions through the government's environmental reporting guidelines and voluntarily compensate for those unavoidable emissions. And I've seen a change in focus recently from companies who are moving from making claims about offsetting to properly thinking about their net zero strategy, in terms of setting targets to reduce their emissions and then looking at how they buy credits to come to net zero. And I guess from the Woodland Carbon Code, we've had projects from small SMEs to large-scale companies buying our credits, and all the transactions are publicly available on our registry to avoid double counting and for complete transparency in the reporting of emissions by companies. And the buyers are from all kinds of sectors, whether that's retail, events, transport and finance. And in terms of, I guess, why they're buying credits from us, if you're buying a credit from the Woodland Carbon Code or the Peatland Code, it's not just a ton of CO2, it's something that's local and tangible and possibly visitable. And it's a ton of CO2 that comes with a whole load of other benefits, whether that's for biodiversity or water quality or community engagement or supporting rural jobs. And most corporates are buying credits. But some are looking to buy land to generate their own credits, to have more control over that project and the credits that are created. And recently, investors like Aviva, Par Equity and Aberdeen Standard Investments have announced either land purchases or forestry investment funds, which will part of the fund generates carbon credits either as a return for investors or to sell on. And at the moment, the secondary market in the UK is quite limited. Brokers have to be authorised by the Financial Conduct Authority, and there's only one or two that are kind of registered at the moment. So looking to the future, some landowners are also considering whether they'll need to use the credits themselves to manage their own emissions, especially with pressure via the food supply chain, with supermarkets looking to address their Scope 3 emissions. And equally, the government's current consultation about the future of the UK emissions trading scheme is an interesting development, and the extent to which carbon credits will be allowed in the ETS obviously potentially opens up new markets and new buyers for these kinds of credits. I guess one other thing I'd just say is that there are also many standards and methods in development at the moment. So there's lots of nature-based standards being developed for hedgerows, soil, carbon, salt marshes and sea kelp, as well as potentially looking at retrofitting fully insulated houses, and that you've been hearing about lots of other projects today. So there's lots more in the future, which is very exciting.
That's really interesting. Can you give us a sense of how demand for credits, for your credits, has changed? Has it risen substantially in the last, say, year, 18 months, 2 years?
Certainly, if you look at from both sides, the supply and the demand side, the number of projects we have registered has doubled. The last 2 years, it's doubled and doubled again. And in terms of demand, our project developers will tell you that they're struggling to keep up with demand. They're almost having to turn people away. They can't get projects in quick enough to manage the demand. So.
And who are the biggest buyers? Who are the biggest buyers?
It ranges. So there's various scales of corporates involved and various from various sectors. So some of the bigger buyers, I guess, I'll leave it that there's, they're ranging across a lot of sectors and a lot of lots of sizes of corporates.
I mean, I do remember being at an event about maybe actually it was pre-pandemic now that I think about it, and there was the chief executive of a large UK airline who was saying that they expected alone to be able to exhaust the UK supply of credits in a very short time. But I mean, is supply going to potentially get very tight very soon, do you think?
I think it's a very exciting time. Certainly there's a lot more woodland creation projects coming forward that isn't without creating tension in terms of thinking about land use in the UK and how land use should change. both for woodland and for other types of projects, whether that's soil carbon projects or peatland restoration projects.
Yeah, yeah. Very interesting. Caitlin, let me turn to you since you're trying to increase supply. Now, Counteract has already backed more than 10 companies. Can you tell us what sorts of work they're doing and how they actually plan to make money out of it?
Yeah, sure. Thanks, Pilita. So as you mentioned, Counteract invests in very early stage carbon removal companies, and we say CO2e, so that can include all greenhouse gases. And that ranges from what we would call nature-based to engineered, and I know that they are an iteration of how we refer to that spectrum, but ranging from MRV in soil carbon or above ground biomass. And I remember, Vicky, the first time I met you just over a year ago, we were talking about allometric equations in trees. But then on the other end of the spectrum is direct air capture, enhanced weathering, and in the middle, what we call the hybrid space, there's biomass burial and pickling, and even biomass gasification to hydrogen and carbon injection.
Did you say pickling?
Yeah.
What does that mean exactly?
So, like how you pickle, gherkins or the likes. They're probably not a good analogy, but recently they found a ship deep underwater that had been preserved because of the saline environment. And for instance, this company, it's called Earth. It's in Australia, where there used to be deep-rooted native trees, got ripped up to put in wheat across the wheat belt, and the groundwater table rose along with the salt water from the sea coming in, saturated salts on the surface of those soils, such that they're now 5 times saltier than the ocean. So nothing can grow there, so it's prime environment to actually bury biomass and keep it in that state, and you can measure it directly to see, how, if there's an increase in temperature or any gases which indicate that there's decomposition, then you know immediately that there's some kind of space, and you can go and retrofit it and make sure that it's encapsulated. So it's quite out there, but it's quite an interesting approach, and they've actually managed to sell a whole lot of future carbon removal credits from reinsurers even before they've proven out the methodology, but they haven't proven out the scale yet.
So reinsurance companies are basically investing in them, or they're buying credits. They're generating credits.
They're buying the future credits.
Okay. They're taking an option on future credits.
So yeah, so essentially once they've proven out that you can get the corks, so in this example it's on a platform called Puro.earth, once they've proven that the science can get there, then they basically get the cash to develop out the first module.
Okay, interesting.
Yeah, and so that's one example, but then on the other end of the spectrum, as I mentioned, for instance, soil carbon quantification, they're getting their revenues from soil samples. And down the line, maybe they'll actually commercialize the data that they're getting from those soil samples. So it's not only solely relying on the sale of carbon credits.
Yeah, that's incredibly interesting. The previous panel discussed social equity issues, and there was the idea of letting communities around greenhouse gas removal projects invest in them. I wonder what you think about that.
So we love opportunities that prioritize co-benefits and social co-benefits. I think what I might mention is our kind of investment criteria. One is catalytic from a carbon removal perspective, diverse along that spectrum that I mentioned, self-sustaining for their business model, but really importantly is responsible, both environmentally, so not negatively impacting other environmental objectives, but then socially, so where possible, prioritizing objectives that are involving the community. And to date, actually, we were recently looking at a company in Kenya that's we haven't invested, we're still diligencing them, but they are looking at developing their own community-based MRV methodology that could then be peer-reviewed to see if it could meet a standard. But that's a way of basically decentralizing where the capital from the carbon credits are going to.
And do you have a rough idea? I mean, if all of the projects, the 11 companies that you've invested in, should they all succeed as planned, do you have a rough idea of the size of emissions likely to be removed?
So how we look at each opportunity is to see what would have to be true to enable that specific company to catalyze 0.5 gigaton removal. And it would be very different if you had to look at a soil carbon quantification company, which you have to then assume how much land must they help transition to regenerative agriculture, and what do we assume that a land that might have a lower baseline carbon level, how much uptake could it take per year until it saturates to its maximum potential. So there's kind of an assumption there, and what portion of the market could it get to. All the way to the direct air capture side, doesn't make sense that they can get to 0.5 gigaton cumulatively by 2050. But if you had to put them together, you can kind of do the maths and see like 500 million tons.
Yeah. I mean, I guess compared to the scale of what's needed, at the moment it's small, as we all know, but you're thinking that it's going to actually explode in a matter of years.
Matter of years, I guess we are hoping to catalyze 5 gigatons by 2050. I think how you measure that is, I mean, it requires a lot of assumptions, and how you measure the ripple effect is something that's hard in itself, but it's something that we think about a lot.
Alberto, let me go to you, because Microsoft's been an extremely large buyer of carbon removal credits. In fact, last time I looked, you were the largest in the world. I think that that's possibly still the case, because you've got these very interesting set of climate change commitments where you're pledging to be not just net zero, but carbon negative by 2030, meaning you'll be removing more carbon than you emit each year. And then by 2050, you're aiming to have removed all the emissions that the company was ever responsible for since it was founded in 1975. Can you just very briefly give us an update on what you've been investing in so far to reach these goals, and what you've achieved in terms of removed carbon?
Yeah, so it's exactly as you say, and thank you very much for the opportunity to talk about that, and apologies that I cannot be there with you today. And one thing that I wanted to emphasize, actually, before talking about carbon removal, because carbon removal is very important to us, but one of the first steps that we are really aiming, and that is critical for us, to really reduce our emissions. So beyond what you are saying there, we are also taking steps to, in 2025, kind of reduce our direct emissions, kind of energy efficiencies, and the use of 100% renewable energy. And then by 2030, to also reduce the emissions of our value chain. And that includes all of our suppliers and the users of our products by more than half. And then is when we're going to being able to remove the rest. And in terms of progress, as you say, we have been one of the biggest, if not the biggest, kind of corporate purchase of carbon removal solutions. We have bought more than 2.5 million tons of CO2. And of course, we do this to achieve our commitments, but we also do it to learn, because the carbon removal space is still a very nascent space. And we are in the optimistic side in the panel, and as we were saying, we really consider that this is going to become kind of a market that can scale at around 2030. But for us in Microsoft, that means that we really want to invest in a very diverse portfolio, and that includes kind of low durability solutions like kind of forestry projects or soil projects or even blue carbon projects, or solutions as well in kind of the medium durability, and that's an area where we have been investing a lot in kind of biochar projects, and then high durability solutions that we can store in the geosphere, and that includes kind of direct air capture, for example. So we really believe that because of the position that we are taking, in which for us carbon removal is very important to be able to achieve these commitments of becoming carbon negative, we really invest across the whole piece. But the large majority of our portfolio is heavily weighted towards the kind of the low durability natural solutions, and that's simply because those solutions are the ones that are currently more advanced and are currently more available. And there is an issue here in terms of the availability of high quality solutions for carbon removal. The other thing that we really do, and it's very important for us, is that we see ourselves as a pilot user. And to put it simply, the world needs much more carbon removal capacity than there is available at this moment in time. And this is one of the reasons that we try to be very transparent and publish and document everything that we do. And last year, we published a white paper documenting the whole kind of procurement process that we follow in all of these kind of corporate purchase of carbon removal solutions, but also scientific papers. And we published, for example, a paper in Nature discovering some of the scientific key issues, like the key differences that exist between kind of solar and long-term storage of carbon. And we do this because we believe it's very important, actually, to create this kind of transparency to help the evolution of the market by providing funding. So we buy and we provide funding, and on top of the corporate purchase of carbon removal, we also created a $1 billion fund of climate innovation fund to really help facilitate the development of these type of solutions, but also to work and work with others across government and industry to help definitions and the creation of a standard for carbon removal, because this is one of the areas that we see actually that really need quite a lot of work to increase the supply. We really need to create together kind of better standards and definitions, and that will help actually to incentivize innovation, to create a bigger supply of solutions. But I will stop there, and I'm really very much looking forward to the rest of the conversation.
Okay, thanks. I did just before we turn to Katharina, I just wanted to ask you whether you think that eventually, or when you think perhaps, I should say, direct air capture might overtake nature-based solutions in terms of the sorts of projects out there, or the ones that companies like Microsoft are able to invest in.
It's difficult to predict that. So we are definitely investing in direct air capture because it's an area that if people make a decision based uniquely in terms of the cost of a ton of carbon, people would only buy some of the solutions that are more developed at the moment and more available. Direct air capture is far more expensive than some of the other solutions of kind of lower durability, but it has the advantage of potentially kind of scale much bigger than some of the nature-based solutions. So we are investing in it, but it's difficult at this moment in time to be able to create a prediction of when we are going to see kind of a crossover in terms of the curves of the availability of solutions from these different options. We definitely expect to see progress here, but there is quite a lot of work, and we are also creating research programs, for example, to apply computational tools to facilitate the engineering design of these kind of direct air capture plants, because there is quite a lot of elements from the engineering of materials to the engineering of the plants that need to be paid quite a lot of attention actually to be able to accelerate progress.
Yeah. Well, mention of research leads me to go straight on to Katharina, because of course we've already heard about the generous £1.2 million research grant that Bank of America's offering to the Smith School to support greenhouse gas removal research. But the bank has a goal to deploy $1.5 trillion of capital in sustainable finance by 2030. I just wonder how much of that at the moment is going into greenhouse gas removal?
Probably a minuscule amount. And it's, I think it's a good question, and maybe I have to explain a little bit. We have actually quite different people here, which is perfect for me to explain how we fit in. We are here to scale, right? You all have bank accounts, and Bank of America is a retail bank as well in the US. And you don't want your money in your bank account or your bank to die. So the only thing I can do is invest in reasonable or deploy capital in reasonably safe projects through debt. And we saw the Woodland Trust, who provides the opportunity to create carbon credits, and maybe Microsoft buys those carbon credits, and maybe you have a different type of technology where you create carbon credits and Microsoft wants to buy it. But Microsoft is really a strong company. But there are options for Microsoft to say, look, I want to scale it even more, and I want to take some money from Bank of America and not only use cash, but put 10 times debt on this, and then even deploy even more buying of the voluntary carbon offsets of the Woodland Trust, or your ideas, what you're doing. And in that way, the technology is being pushed forward, or the market is being pushed forward. And that's really what we do. And that's the reason why we're still so small in gas removal, is that this is a relatively new market, right? We are creating that market as Bank of America. So when you think about it, we do two things with that money. in some sort of shape. We deploy capital in renewables, and we sometimes deploy capital in very new things, but there we need offtake agreements, right? We effectively need offtake agreements, be it a Microsoft, or be it a group of people who say, we will buy these offsets, come what may, for the next 10, 15 years. And that's hard to find. And you want to keep your money in your banks. You don't want your banks to go bust, effectively, right? So we need to be careful with that. But when we look at what we have deployed capital with in the last year, then 67% of the capital we have deployed. There's lots of different ways to account for it, and I don't want to go into it, how much it is, but it has an E factor in it, and mostly it's in renewables. So to do with renewables or some sort of green angle some corporate is trying to get. But we do a lot of more work, and it's much harder to work on the gas removal side or on creating a market. We are trying to create a market for voluntary carbon offsets. I have had probably 60 meetings in Europe with corporates to try to talk to them that they can even now use voluntary carbon offsets as a marketing tool to make themselves greener. And the question I'm getting very often from them, or mostly, is why should I do something which my competitor doesn't do? So there is lots of stuff to do, but we're here to scale. We have deployed a lot of capital on E, and we will deploy a lot of capital on the carbon side, carbon gas removal as well. Maybe just one point on the crossing over and on the demand side. I do see there will be additional demand for offsets, and it will not be that much a function initially that carbon DAC will be so much cheaper. I just think there won't be enough nature-based solutions for people to fulfill their requirements.
Because there's not enough, because there's not enough demand now to foster them, or to?
Because ultimately it takes 4 to 6 years to develop a nature-based solution properly, and we will most likely see more government action in case our environment becomes more stressed, and that's probably in the next 4 to 6 years.
Right.
So, and at that point in time, we have seen, when I started working in this field 2 years ago, the price for a simple carbon offsets was $3 to $5. It's $21 now. So that's not a lot, but it will change a lot.
Is that, $21, what does that buy? What sort of offset does that get you, though? Is it
a forestation offset, a simple forestation offset with not much additionality, as we call it, so co-benefits.
In which country?
Normally in emerging markets.
Right. Vicky, is that price sound as though it's similar to what people are paying here, though, for the Woodland Carbon Code credits?
So we don't have any formal carbon price index or anything yet, but from the feedback I've had from those who are buying and selling, I guess the price for PIUs, so buying credits upfront, is between 10 and 20 pounds sterling, so slightly more than the dollar. And that's increasing, so I've heard of some sales at 30, and then if people are buying verified woodland carbon units that they can use straight away, certainly the price is higher, and that's more 30 or 40 pounds sterling per ton.
But that's in the UK, right? So
yeah.
Unfortunately, Western woods are more precious than non-Western woods.
But for as long as those credits are widely available on the market, we're not going to presumably see the sorts of investments in, or see more demand for credits generated by things like Climeworks and these big direct air capture projects. Companies are going to continue to go for the cheaper credits, I imagine.
It's an interesting question. I had thought as well. I'll give it to you in a second. There are people who really want to invest in the technology. So if you.
Yeah, I agree. I think what we haven't touched on yet is how the kind of trust in that marketplace is. So how do you know that the $20 you're paying to protect the trees are actually protecting the trees? And I think that's why it's so important to have, especially in the nature-based solutions, a lot more visibility over what's actually happening and accountability for the underlying owners.
Yeah. I know we've got a lot of questions, which I'm going to get to right now, given that we're now at 3:34. Before I ask another one, let me just start off with the first one. MRV has been discussed many times today and is a big challenge for credible greenhouse gas removal. How is the Woodland and Peatland Carbon Code tackling this to ensure the offsets are trusted, Vicky?
So I guess the first thing is that within our registry, everything has to be publicly available. We both have prediction tools which say what's likely to happen that are based on the best research available that also feeds into the UK's greenhouse gas inventory. And then we have monitoring and verification is required at the moment at least every 10 years. At the moment, most of it is field-based, but we are looking at new technology, and as and when it becomes available and cost-effective and at least as good as field-based, we would use whatever that is, whether it's drone, plane or satellite-based, whether it's LiDAR or RGB. So we're doing various trials of that at the moment to see how it works, what we can learn from it, and how we can combine that with the kind of traditional field-based monitoring.
Yeah, yeah. Katharina, just one for you, which is a very broad question, but an important one. But for corporate investors, what do you think about the voluntary markets at the moment? Do you trust them? What's needed to fix them? I mean, we've seen Mark Carney spearheading this effort for a year or two now to try to reform them. Right now, what are your views on the voluntary markets?
Thank you for the question. It's actually a very loaded question. We have heard a lot today about accountability in accounting, and there are programs out there similar to what Vicky was talking about, which actually try to verify nature-based solutions or non-nature-based solutions, voluntary carbon offsets. So the first thing is, can you trust these verification methodologies? There are various ones out there. I think that's very important to check. We are comfortable with some of them as Bank of America. But what is the problem? And I would just say one problem, really. One problem is there's no common marketplace where all the various verification agencies can go together and you can actually trade on it. So there's no eBay for all the voluntary carbon offsets. And it makes it incredibly hard. So nobody of you can actually look up if they want to buy something in a voluntary carbon offset project. So the loaded question is, and I don't want to kind of show off, but we are really trying very hard as Bank of America to try to fix that. We have carbon traders now who try to look at this and work with the developers. But we have many verification agencies, and that needs to come together. It needs to be professionalized. And overall, voluntary carbon offsets are great if I want to finish with that. But ideally, they're only used for unavoidable emissions, because we, in the end, want the industry to move forward to actually make the change to be net zero or produce as few emissions as they can. So yes, we need them. We need to account for them properly. We need to create a marketplace, but we need to make sure they're not replacing emission reduction.
Yeah, yeah. Alberto, let me put one of the questions next to you. Do you see any downsides in financing speculative greenhouse gas removal development through offset credits that guarantee continue, or that, a problem in financing things that end up producing continued emissions? Is this a fair way of deciding which emissions should be treated as hard to abate residuals?
I think the way you think about that is a little bit what Katharina was saying. I mean, we really think of this. First, you have to reduce, and you have to make as much reduction as you can on any front that is possible to do. And then you have to consider all the things that you cannot use. What do you do with them? And as we were discussing before, there is an issue here in terms of the supply of solutions for carbon removal. So we really believe in Microsoft that we need to finance some of the solutions that are currently not receiving as much funding, and they are essentially more expensive, but they have huge potential to scale up. And that's why we go into funding some particular options that, yes, are more expensive and they are costing us more money, but we are not doing it only because we want to kind of achieve a corporate target. We really are doing this because we want to increase the overall supply for the world, because if we are not able to reach as a kind of a humanity and human society something of the order of 5 to 10 gigatons, we are going to struggle to really achieve net zero by 2050. So in that sense, it's not an issue of essentially making choices that are trying to stop reduction or not. So we believe that we have to reduce as much as we can, and we put a lot of effort in that, and we believe that we need to increase the supply of carbon removal, and we finance projects that require quite a lot of investment from technology and requires quite a lot of new research and understanding to become viable and scalable. So that's for us the reason that we have a very varied portfolio here, because we really want to achieve our targets, but also improve the availability of solutions.
Yeah. Caitlin, there's a question specifically for you. What do you think are the biggest barriers to tech-based solutions being deployed at scale?
I think the biggest ones that we are seeing or foreseeing is one on the CapEx side. So this is where big debt facilities will come in. If you think back to where the solar panel was years ago, how that PV module iterated from the science to large scale has to essentially be really, really confined from a time perspective if we're going to meet the scale that's required according to the IPC scenarios. So I think that's a potential barrier, also an opportunity for collaboration. And another one is, I think, from specifically on the technical side, is the energy intensity of some of the technologies that we're seeing is huge. And if you're thinking about the competing uses of that, and also biofuel, lots of companies we're seeing are using agricultural waste. But if you think about aviation that's wanting to switch to biofuel and alternative fuels, you need to think about, is the best use of that carbon removal, or in that case, the potential other trade-offs.
So when you talk about the energy intensity, you're talking about something like direct air capture, needing a lot of energy, and if you don't have the renewables nearby to generate the energy, you're in trouble.
Yeah, and also some processes requiring, for instance, some of the calcination processes need to be above 500 degrees Celsius, which you can't get to with renewable energy. So backing solutions that can use renewable energy, for instance, a lot of the electrochemical solutions, Mission Zero Technologies, which was announced in the BASE competition today. There are a lot of kind of next-gen DAC companies that we are very excited about, because if you can bring the cost per ton down as well as the energy intensity and able to use renewable energy, then I think that's an area that we see a huge scale, and we need Bank of America and the likes to be putting debt financing into them.
Yeah. Let me put you slightly on the spot again, Katharina, not too much, I don't think, hopefully. But if you had to bet on which technology, which carbon removal technology was going to triumph in the next 10 to 15 years, what would you say right now?
I think the best answer I can give is it's probably not developed yet.
Really? Not Counteract hasn't even looked at it yet, you think?
I would think that we are at that stage where we still need to have that marketplace of new companies, and we will find something which is low energy and usable in small or big scale when we want to, like we have the renewables. We can do them in scale, and we can do them on a rooftop. And I think that is the golden goose we need to get to, and I believe that we don't have that yet.
Do you think that's right, Caitlin?
I would disagree, because I think we need them all, and so I think I actually disagree with the question in that we shouldn't be framing the question around one winner. We need a balance. We need nature. We need technology. We need a mix, and we don't know what the right mix is. But I guess events like this, bringing in scientists, bringing in investors, bringing in researchers, we need the combination and the collaboration to figure out how we're going to get there at scale, and that will be very dependent on the geography, what the right mix is, in my opinion.
So it will vary from country to country. Alberto, what do you think? From where you sit, what do you think is going to be, let me phrase it a different way, perhaps the most widely used technology in, say, 10 to 15 years?
So I'm afraid I'm going to disappoint you, because I'm completely in Kathleen's camp on this one. So I really believe that we are going to need the whole portfolio here. I think it's not going to be a single winner or even a single kind of set of technologies or approaches that are going to win. I think we're going to need all of them, because they have different characteristics, and this is something that is very interesting that people should think about when they go into carbon removal. How long are you aiming to remove the carbon for? What kind of funding do you have to do this? Because there are certain things that you're going to have to do that. If you're going to remove using an approach that is going to last for 20 years, you will need continuous funding to be doing that. And that means that you have to have a different approach, that you are using a kind of a geological kind of a storage solution that is going to potentially stay there for thousands of years. So I really think, and this is the way that we are voting with our own money, that we will need a diverse portfolio, and we are really investing in a diverse portfolio for that reason.
Yeah, yeah. And Vicky, I assume that you're going to say trees are always going to be popular, but maybe not. I mean, and of course we don't have enough room for all of them to meet demand, do we?
Exactly. It can't be the only solution because there just isn't enough land on the planet. However, you know, investing in trees also helps us solve the biodiversity crisis as well as the climate crisis. So you're getting two bangs for your buck, if you like. But yeah, I think we need everything. Yeah, yeah. You have to excuse me. I just got a new phone from work, and it's quite tricky to turn on and off. But there were some other very interesting questions. I just thought in our remaining minutes that we could get to. This is an interesting one. I'm not sure who to put it to, really. Maybe Caitlin. Does investing in British greenhouse gas removal projects look more beneficial than European projects at the moment?
I guess beneficial from which perspective?
An investor's perspective.
I think it's hard for me to answer that because we invest globally. I think if we had to look at our portfolio, we probably have more UK than European companies. And I think that initiatives like this, where you're bringing together different entities, is going to ultimately help the ecosystem thrive. So long-winded way of saying, yes, I think that the mechanisms are coming into place to make the UK kind of ripe for both generation of technologies out of some of the brilliant universities and surrounding frameworks there, but then also bringing together the players for the offtake. But I don't think that needs to exclude Europe. I actually think it would be stronger altogether.
Yeah. Katharina, there's another question, a Bank of America question here. It's really asking for clarification. Is the bank withholding investment on the basis of a hypothetical better future solution?
Not at all. The question, how I see it, is we need to, similar to what Kathleen said, invest in as much as possible today to find that one solution or a combination of solution. But the solution which I envisage when I hear about carbon removal is something which is actually direct air capture or removal, because forests we know it's not enough, right? So so my view is we have to invest, and that's what we're doing. We're deploying capital in anybody who can provide us with some sort of structure which we can feel we can get our money back within a reasonable probability.
Yeah, yeah. I mean, looking out at the broader landscape, Bank of America is hardly alone in its view that it's very difficult to invest at the moment in these projects, right? I mean, otherwise there'd be a lot more money in there than there is at the moment.
I think I would just say that there is definitely incredible movement in the sector. There have been many, many more asks even in the last 2-3 months, just with coming to us and saying, what do we need to do? And there are many more corporates who are willing to enter these long-term offtake agreements. So we are looking at these type of structures, and it's exponentially increasing, especially this year. So I would say that really is probably the most positive thing you can see, that there are corporates out there who want to do this and support the trajectory into something they might not know if it's going to work.
Yeah, yeah. I'm just finally, I mean, it's a question that I know has been discussed in earlier panels, but it's still one that is going to come up every time there's ever a conference on greenhouse gas removal. But how big is the risk of poorly implemented or environmentally damaging greenhouse gas removal undermining the market going to be? I mean, given that the market's very small at the moment, but as it continues to grow, how big is that risk that projects that don't really do what they're allegedly supposed to do on the tin is going to undermine things? What do you think, Caitlin?
I mean, the risk is there. How big is it? I think if we go back to previous clean tech bubbles, or however you want to call them, there was a lot of hype, and there definitely is within the carbon removal, greenhouse gas removal space, hype in certain areas, which you can see even just between one round of investments and the next. But I think if we take a step back and look at it on a planet level, if we're going to meet any of the IPCC scenarios, then we're going to need to place a lot of bets, and I'm sure there will be a number that fail, but the learnings from those failures will hopefully apply to new technologies coming through. So I think it's risky, but I wouldn't be disheartened by that risk.
Alberto, at Microsoft, I know that you have very rigid guidelines on what you will and won't accept when it comes to carbon removal projects. Are you seeing any coming across or coming out or emerging that could potentially undermine the market, do you think?
So definitely what we see, and I think this is the difficulty in the market, is that currently pretty much every project needs quite a lot of kind of its own assessment and investigation and understanding. So it's not a simple thing that you can compare one with another, because every project is different. And that means that you need to build quite a lot of internal capability, and that puts a kind of a demand on resources and make things actually requiring research and investigation and care in the way that you are investing. So we are working quite hard from the point of view of using all of our experiences to really help the suppliers to make it easier for people like us to evaluate the solutions that are being put forward, and then to really help kind of regulators and the rest of the industry to work together to create the standards. Really, the creation of standards to facilitate that kind of trust emerges in the market is really, really critical. So it's still a very nascent market, and if you have a nascent market, the first thing that you want is to really build up trust. So creating the standards and making easier for people to understand what you are buying, and having all of these criteria really easily presented to you, I think is going to be the most important thing in the next few years, to really see this market kind of growing faster. And there was a comment about the UK, and I would really like to see this happening in the UK. I think in the UK there is potential, but currently we are lagging behind other places in terms of the number of projects and people and companies that is doing these things. So I think there is a huge opportunity here to do more.
Yeah.
Can I add to that? Because that
Sure.
sparked a thought that with that large risk, there's also the ability to provide more transparency to the buyers in the market. I think will place a lot more kind of onus on the buyers to look into the methodology and look into the risk associated with it, which I think is an important space that MRV is filling. So even I think one of the remote sensing for above ground biomass companies that we've supported are working with Microsoft, and being able to know the risk level associated with every kind of credit you are buying is then empowering kind of more transparency and the buyer to have more visibility of that risk.
Yeah, yeah. Well, thank you all very much. Unfortunately, we have run out of time, but I think I'm sure people agree with me. It's just extremely interesting to hear about all the activity that's going on already at places like Counteract. Very interesting to hear how Microsoft's been progressing with what is probably one of the most ambitious corporate climate target setting that I think anyone's seen. Fascinating to hear Bank of America's view, which I think is something that we always need to bear in mind when people like me get very excited about things like carbon removal projects, but it's always good to have a voice of investment in the room warning that it's not always as easy as it looks. And Vicky, really interesting to just hear the sort of progress that's being made with Woodland, peat and hedgerows, everything else out there that the UK is doing, which I think is probably something that's not as widely appreciated perhaps in the UK as it might have been. So thank you all very much. I'm going to hand over now to Jim Watson, who's going to give some closing remarks. Thanks so much.
Thanks.